while the Hang Seng is in the red right now, 42 points lower there. The Taiwanese index is up 135 points.
Bollinger Band for the Nifty is 24,067.
A 5,000 crore QFE issue is likely by Bank of Maharashtra.
JP Morgan has put out a note on Tata Motors. Very interesting one there. They have an overweight on the stock. They have a target price of 1,115. So that's a big upside to the current market price. It's absolutely flat on the opening bell, but holding on to the 23,700 mark.
Today, market is pricing in continuity of government and continuity of reforms.
Nearly 2.5% equity got changed hands at an average price of 425, which works. The deal size works out to over 4,000 crores.
There is no urgent, emergent need on me to raise the capital for growth.
Strategies are in place, our order book is in place, and our future order book also looks good.
50 points. The sensex is inched up 250 points.
NDA's candidate Om Birla has been elected as the Speaker of the Lok Sabha.
They are now considering extending the PLI scheme to the garment sector to boost manufacturing and exports.
The 4.8% equity had changed hands in multiple blocks valued at close to 8,000 crore rupees.
The Nifty is up 117 points right now and at the day's high.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, it's a good-looking screen once again, almost deja vu. Not as powerful, as strong, as sharp as yesterday, but it is a good day. And it's led by banks once again. So that's the deja vu part of it, actually. Reliance, of course, is helping a lot. We'll talk about all of that and more in a bit. This is, of course, we're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me, my colleagues Rima and Mangalam. Guys, hi, good afternoon.
Good afternoon.
Hi, afternoon. And once again, mid-caps have taken a bit of a backseat. Right, this week, the mid-cap index has underperformed the benchmarks by nearly 1.5%.
But maybe not as severe as yesterday, right? Yesterday was looking a lot more. I mean, I think you're making the point, portfolios perhaps are not feeling a little down and out. Today, you know, a little better, I think,
and,
on an overall basis.
What's interesting is that between yesterday and today as well, while there are as many stocks which are declining versus the stocks which are advancing, the ones which are gaining are actually seeing big gains. We have, stocks which are gaining in double digits, the ones which are gaining already. Whereas the stocks which are losing, the maximum loss is closer to 5%, 3, 4, 5%. So if you have the stocks which are gaining today, you would obviously feel a lot better in your portfolio than, the quantum of losses are a lot lower.
No, you just have to take a quick look at, the screen, and it's very clear that volumes are on the side of gainers. Big volumes across a long list of sort of gains. Yeah. And some very interesting ones as well, which we'll discuss in a bit. But anyway, just a quick couple of points before we sort of take this conversation forward. Banks and Reliance. Actually, Reliance is about 50% of the 150 point gain. So Reliance is contributing about 75 index points to the Nifty. That's 50% of this move that we are seeing. So that's the difference. I think the others, of course, are ICICI Bank and some of the other large banking stocks which are also sort of contributing. So it's not one-way banks. It's a little more even. Metals are down, real estate is down, and autos are seeing a bit of a pullback as well. And mid-caps and small-caps, the last I checked, they were absolutely flat. So they're not down sharply, 0.5% like yesterday. And market breadth is also more evenly matched as opposed to what we saw in trade. But yeah, I mean, on the gaining side, there is a lot of stuff to discuss and lots of stuff really popping up 10, 15% and more. And we'll get to some of that in just a bit. Rima.
In fact, I think the contribution plate should come up because it's fairly instructive. Reliance Industries single-handedly is contributing 50 points to the Nifty up move. The Nifty is up close to about 150 points. Of that, about almost 77, 80 points is courtesy one stock, Reliance Industries. There you have it, 81 points coming through on account of Reliance Industries. Even in banks, HDFC Bank is in the red, but it's recovered from the day's low. At one point of time, HDFC Bank had a cut of close to about 1%, and now it's managed to trim its losses, so just down close to about 0.2%, while ICICI Bank and Kotak Mahindra Bank are doing the heavy lifting when it comes to banks. And another pocket which we'll talk about is telecom. And telecom's, firing away today.
Absolutely, it is. Bharti Airtel is one of the big contributors on the Nifty today, if not the biggest gainer. Yes, it is the the biggest gainer by a mile. We have 4% gains on Bharti Airtel, about 4% on Reliance as well. What's interesting, however, is that even as the Nifty Bank is recovered from the lows in the morning, it seems like someone's keeping the big boy at bay right now. And that someone or something is the Nifty Bank options expiry that is going to play out in the next 1 hour. So if you just take a look at all the other banks, and if you look at HDFC Bank, the intraday chart of HDFC Bank comes up for you. It has recovered a strong bit from the lows in today's trading session, but still not broken into the green so far. So it's just under the flat line. If HDFC Bank moves higher, only then can we see the Nifty Bank move higher as well. But is the Nifty Bank going to move higher? Perhaps not. Why is that? Because we have seen a fair amount of writing at the 53,000 call. At the lower level, the 52,500 put had seen a fair amount of writing in the morning itself. So even as the Nifty Bank broke below the 52,500 mark once, it recovered swiftly from there, recovered all the way up to very close to 53,000. And from there, it's seen some supply. So that's the range that we're looking at for the Nifty Bank today. And the Nifty is going to be a lot more interesting because it's the Nifty monthly expiry tomorrow. 23,700 put, very active, telling you that the base has moved higher to 23,650, which is basically the earlier resistance congestion zone that we had on the market. So we broke out of that yesterday, and now that has become a support. On the way up, though, 23,900 thereabouts is where you can see some sort of congestion, or that's what the option writers are positioning themselves for. Because who's to say the Nifty, doesn't cross about 100 points in tomorrow's trading session? I'm just watching out for one stock as of now. That's India Cements. The big move that's taken place 1 day ahead of expiry, the stock may enter F&O ban. Given the open interest activity that there is, it's crossed way past the 95% market-wide position limit that there is for the stock to go into an F&O ban.
Absolutely. Mangal, as of yesterday's close, what was the long position, the index futures? Do we have that?
As of yesterday, the long positions were 1,40,000 contracts. Okay. The long exposure was 61%.
1.4 lakh is I mean, we are now
70,000.
We're actually getting to not there, but getting to an extreme.
Getting to an extreme. I mean, at the start of the series, the number was minus 3.11 lakh on the short side, and now that is turned into 1.4 lakh on the long side.
That was before the election, going into the election.
That was going into the election.
And right now, we've completely swung the other way, and so we're getting to the other extreme. So that is another sort of broad indicator. It doesn't tell you exactly, but it does. It's something which works. So we're not there yet. But we're sort of getting to a bit of an extreme on the other side in terms of long positions. Well, how should you position here and now, though, is the question. Mitesh Thakur is with us with exactly that answer to that question. Mitesh, good to have you here. So, by the time we get to you at 2:30, Mitesh, market makes sure it is up at least 100, if not 150 like today. What should one do?
So, I was talking about this fact that banks are doing well. I think it was catching up and banks are coming to play, and Reliance joined the rally sometime in the news. So we were looking at 23,950. I think we are well on our way to hit that trading target. But that apart, I think the breadth still remains impressive, and that suggests that we are not looking at any kind of a big declining move happening on the indices. So stay long. Not a good time to enter afresh if somebody wants to buy the index, but that can be kind of compensated by buying into stocks. And that is the idea. I think we saw last few days, we saw that the FMCG stocks were giving a pullback. Now they are coming back into some kind of a trend. So I have a buy on Britannia. There's a buy with the stop below levels of 53.70, sorry. And look for a target of 55.20 here. And Indus Tower also, after consolidation or pullback, is now again moving out on the upside. So buy here with the stop at about 345 and look for a target of 370.
Okay, that's some individual stock ideas. Let's get to Stylem because that surged close to about 8%. Remember, Yash had reported on 9th of May, I think, that Japanese major Aika Kogyo is looking to acquire a 40% stake in the company. Now, following this report, today we've got Investec, who's released a report, and they say this is a positive trigger for the stock. Yash joins in with the details. Yash.
Laminates major Stylem Industries is in focus in today's trading session, and that is on the back of a very interesting report which has come from Investec. Investec has initiated coverage on Stylem Industries with a buy rating and a target price of 2362 rupees per share, which is an upside potential of as much as 40%. At the target price, Stylem Industries will trade at 25 times FY26 estimated price to earnings. Now, as far as Investec's view is concerned, they say that a different approach on marketing as well as distribution versus market leader has helped Stylum Industries drive its earnings at about 30% CAGR between FY 2004 to FY24. Also, the per unit revenue for Stylum Industries has lagged peers, but the company has better operating margins. Looking into the future, Investec says that an incremental expansion offers attractive ROCE profile for Stylum Industries, and they forecast a 17% and a 19% volume and revenue CAGR from the laminates business between FY24 to FY26. They expect EBITDA and PAT CAGR of 19% and 11% in the same period. Also, 11% EPS CAGR between FY24 to FY26. Interestingly, Investec says that a potential strategic investment could enhance Stylum's technology, distribution, brand placement capability. Remember, on May 9th, CNBC-TV18 had reported that Japanese major Aika Kogyo is looking to acquire about 40% stake in Stylum Industries, which will be done through acquiring promoter stake as well as through an open offer in the share purchase agreement.
Right, that's about an up move that we're seeing in Stylum. Meanwhile, I'm just also looking at a bunch of stocks which are, buzzing around right now. Raymond, for instance, is up around 6%. Senco is one of them. Senco, we had the management join us, in the afternoon itself, and they did say that they are looking at 18 to 20% growth this year as well, and looking to also expand beyond their core markets while maintaining their market share in core markets. The most important thing they said was that lab-grown diamonds is a business that they are starting out in. They're starting a lab-grown diamonds brand itself. So were that to happen, we would see a fair amount of customers getting attracted to that, because so far we haven't heard much on the lab-grown diamond foray as a business opportunity from a lot of the larger players. So let's see whether that brings them a lot more growth than, the other players in the diamond business itself. Prakash Diwan joins us now on the show. Prakash, a lot of stocks buzzing around in today's trading session. Top of the table is the telecom space. What are your thoughts? What do you like right now?
I think, good afternoon, Mangalam. I think very clearly there seems to be the outcome of the spectrum auction and the imminent price hike that seems to be getting baked in is probably the biggest trigger. And this is the trigger that's been much awaited. Now you have a semblance of normalizing or some sort of an equilibrium in terms of market play, with all the three players wanting to kind of look at expanding after a fairly long gap of almost about 12 months. So good times rolling in. Price hike, of course, not as a consumer, but as a stakeholder, as a shareholder, things could probably be very different. My sense is Bharti Hexacom, of course, post the IPO, it's kind of done so well. If you get this at a lower level, it's probably a good stock to look at. Otherwise, I think Bharti will also continue to kind of march ahead, given the fact that it's poised for some sort of a re-rating once the price hike is announced and the quantum is understood. So very clearly, that's the trigger. But I would believe there's so much that's already happened that you should kind of expect fireworks once once the price hike happens, as and when I don't know whether it's first week of July or it's middle of July, but as and when that happens, probably that would be the interim peaking out for most of these players.
In fact, as Prakash pointed out, the big trigger that the street is latching on to is now that the spectrum auction is concluded, maybe, the path is set for a tariff increase, right? The elections are done, the spectrum auction is concluded. These were the two things the street was the companies were waiting for before going ahead with a tariff increase. And now that path is clear. The street is expecting a 15 to 20% tariff hike this year, and some are saying it could come very soon. The last tariff hike had taken place 2.5 years ago in December of 2021. So it's been a long time coming. Since last year, we've been waiting for a tariff increase. Ambit expects a 20% tariff hike this year, followed by a 12% tariff hike once in every 2 years, and this will sustain till 2030. IFL is talking about a 20% hike in FY25, followed by another 15% hike in FY27. Year to date, Bharti is up close to about 40%. Reliance Industries is moving now, 15% gain on that. And the good part about a tariff increase is most of it flows directly into the EBITDA because the costs are fixed. So any tariff hike largely flows into the EBITDA minus little bit which you lose on account of down trading, which means some people may opt out of the expensive plans and they may give up their SIM card. But 70-80% of a tariff increase, the benefit from that flows through into the EBITDA. So it's very, very EBITDA accretive for the telecom companies. And Bharti Hexacom, you can't give a year-to-date listing, year-to-date gain because it's a recent listing, but what a return. 570 was the issue price. It straight away listed at a price above 800 rupees, and from there, it's up close to about 50%. So that's, the Indus Stars is not moving too much, but I think it's already moved.
Waiting for the tariff increase, right?
Waiting.
First, it should come. I think before budget, after budget, I know that is a consideration, but we'll see, right? And the big move in Reliance today, I don't know if that is an indication of the market picking up. One doesn't know, because it's an important trigger even for Reliance because of the Geo business there. I just want to make a quick point. Look at VATech Vabag. I mean, as I was walking in, I looked at the gains on this one. It's up another 10%, 1330 on VATech Vabag. It was flat in the morning. Take a look at that. It really took off post-afternoon and now is up. So for the year, it is up 100. It's up 110, 115% now. So big gains, Prakash. We've discussed this with you. At 800, 900, I think maybe even lower. Absolutely what a move. It's interesting. You had a rating agency, I think it was Moody's, right, yesterday? Coming out with a report essentially talking about, the water crisis, specifically with regards to India. What a scarcity and how that has broader implications for industry, etc. as well. I mean, obviously it has an implication. It's just that we don't hear this kind of stuff or talk at all. But now I think it's getting into the mainstream. Just your thoughts here, Prakash.
No, absolutely, Prashant, you nailed it. And in fact, Rima had a tweet around that water report that you mentioned. This is a crisis which is going to start getting much more broader. It will probably be sporadic at this point in time. Certain geographies where there's this acute water shortage. But then, if the monsoon comes as anticipated, probably we'll forget about it and they start talking about it only next March, April. So that's the opportunity for you to understand that water, whether it's industrial use, whether it's potable water in terms of household use, all of that is going to be a big, big theme. The number of companies that are into this business are fairly few. And VATech Vabag, the call was very interesting, where they actually gave some very good data in terms of what desalinated water costs in terms of, and they compared it with the transportation costs involved in tankers supplying waters to a lot of the urban household needs. So, and they've given examples from the Middle East where they're fairly active. So they have empirical data, they have the experience, they have the vision to be able to do this. And if municipal bodies actually get on to that, I think it's going to turn into a very promising area. So, and as far as VATech Vabag is concerned, I think it's a fairly long-term secular story, Prashant. So you will see these kind of rises because the float is fairly limited now. It's moved into strong hands in the last 6 months. So every time there is some sort of an accelerated buying, you'll see that price behavior. But I'm sure the same way, on the way down, things are available at lower valuations. So you could wait for that. But I believe it's a great story to keep a watch on, if not in your portfolio yet.
All right. Speaking about great stories, one of the most, I don't know whether it's great or not, is definitely the most, entertaining, thrilling, what do you call it, adventurous. That's Z that we're talking about, the whole Z saga that's been playing out for years right now. And, the stock, while it was in FNO, while it still is in FNO, was for a large part also in FNO ban, with price moving either way. Now, it is the last couple of days that the stock will be in FNO itself. Why is that? Because, come July series, which is day after tomorrow, there will be an exclusion of Z from the FNO trading itself. Tomorrow is the last day of trading. NSE, remember, had issued a circular way back in April saying that post June 28, there won't be further contracts of Z in FNO. Why is it that the stock is then moving? Well, there are a couple of reasons. Because as of yesterday, we had about 10.5 crore shares outstanding. This is as of yesterday's Bhav copy. So what happens to these 10.5 crore shares? In case this open interest is on the long side, those guys, if they wish to continue holding this, then they will have to, buy it in the cash market, leading to an up move in the stock price. If they're on the short side, then they still have to buy it in FNO to square that short position, leading to an up move that we're seeing in Z. So until these 10.5 contracts, which were outstanding as of yesterday's close, are taken care of, we won't, we will continue to see a move on that stock itself. But thereafter, what happens is something that we'll keep an eye out on. Prakash, you did speak about some attractive valuations in some sectors. Z, perennially, people look at it, multiple news pieces, all of that, and now it's finally going out of F&O. What are your thoughts here?
So I think you'll have to give it some time, Mangalam, to kind of settle down and see the price behavior without it being available for any kind of speculative build-up on the F&O side. If you largely see the debate on Z was always, there was a hope trade. Most people wanted to go long on Z in the F&O side, expecting that some revival would happen. It would get acquired by somebody stronger. And, this entire Sony Z merger saga would probably be behind us. But that's not going to be so easy. There are lots of, issues that would need to kind of get understood by any potential acquirer in terms of why the deal hasn't gone through. And I think that will take some time. So once it's out of the F&O, in fact, potential acquisition, as and when it happens, will also start fructifying much more easily from a transaction ease perspective. So my sense is you'll have to give it a couple of months and then probably, once the news flow abates around this technicality of it getting out of F&O, that's when you review it from a more fundamental basis. As of now, I'm not in a hurry to look at it.
Okay, all right. Prakash, good conversation. Great speaking with you as always. Thank you very much for joining us here on this edition of Closing Bell. Well, 160 points higher, so maybe a little bit more from the time that we started at 2:30, 23,876. We're going to take a quick commercial break here. There's going to be more stocks we discuss on the other side. We'll also have Aman Chauhan of Abacus Asset Managers on the other side to talk about what they're making of things. Stay tuned. Welcome back. So things are looking up and up, and it's a combination, as we've been saying, of Reliance Industries, which is really starting to fire, and of course the banking pack. It's more broad-based. Yesterday was pure financials. Today it's more broad-based. Our alpha manager today is with us. Aman Chauhan of Abacus Asset Managers is joining us. Aman, good to see you back. It's been a while. Thanks for joining us. Good afternoon. Prashant this side. You know, we were just having a word on what else but telecom before we took that break in the previous segment. Just your thoughts on it's widespread consensus expectation, tariff hikes, and then, I mean, a fair bit of repair for the sector is likely. I just wanted your thoughts on your thinking on the space.
No, we have a similar thought. It's a consensus view now that there's going to be tariff hikes, and now this is a three-player industry, and the government wants it that way. And there will be enough scope for everyone to make decent margins. So right now, even say Bharti and Reliance margins and ROEs are depressed post the rate hike, or with a normalized tariff. I believe they will also have enough profitability to justify the kind of investments they have done in the sector. So nothing different than what the street is thinking about in the sector.
What's changed for the private sector banks to see this kind of an up move? All the triggers, the valuations being reasonable relative to the rest of the markets, the ROEs, ROAs looking up, margins were stable, growth was strong. Everything was there for the last many quarters, and yet we didn't see money plowing into the banking sector. What changed in the last fortnight for this kind of a sudden catch-up to take place?
You also answered it's more of a catch-up. We have seen other sectors doing well, and banking has been in laggard, and it's more of a catch-up. Well, in bank, as you said, nothing much has changed in the banking side. I believe as there's always a sector rotation which keeps on happening. Today it's banking's turn. Maybe this week banks can do well. Overall, from a fundamental perspective, we are also pretty positive on banks, both private as well as the large PSU banks, and the outlook that remains strong. So if you're building a consensus that the GDP growth from here is going to accelerate, GDP can't grow without the banking sector participating. And within that, the private banks as well as the PSU banks both look attractive to us.
All right. So nothing fundamentally has changed, but it's just sector rotation. So what, according to you, have been some of the underlying fundamental changes in some sectors which are making it a little interesting from an investment standpoint?
Over the last few months, we have gone positive on pharma. We have now got selectively positive on chemicals. Both these sectors are either bottoming out or started to recover from the recent lows. We are still neutral on IT. So that's where I can say our views have changed over the past few months. Besides that, continue to stay bullish on infra, cap goods. Financials was always being an overweight for us. So these three sectors are something where fundamentally our view has now turned constructive than what it was, say, 6 months back or a year back.
On pharma, what about hospitals? Earlier today we were having a chat with, Macquarie, and he was indicating, the analyst there, that one, the volumes, the inpatient admission was very strong in FY22 and FY23, closer to 25% because of pent-up demand due to COVID. But that is moderating. In FY24, it came down to just 5%. And that's been the long-term trend, single-digit inpatient volumes. Secondly, even the RBOP was unusually high in the last 2 years, but that will go back, mean revert to, high single digits kind of. So therefore, and plus capacity is being added at a very rapid scale for companies like Max Healthcare, for Apollo Hospitals, for Max in particular. He told us the capacity goes up by 80% in the next 3 years. So where do you stand on hospitals? Because you spoke about being incrementally more positive on pharma.
So we like pharma more than hospitals. Right now, we don't have any hospital exposure. For us, hospital is something which has to be looked on a case-to-case basis, not as a sectoral view, because the companies here have a longer gestation. So they have a large capex for any new expansion that comes in or a new property which comes in. And then it takes time to break even. Till the time there's a continuous drag on the P&L from depreciation and interest costs. And once the hospital normalizes, starts to make money, you announce another hospital, right? So there is very little window where the financial numbers justify the kind of valuation most of these hospitals are trading. So for us, it's more of a case-to-case basis. For now, I think our preference will stay with the pharma companies than the hospitals.
We would just another theme we were talking about is sort of water, right? One name, of course, Viatech Vabag is up 10%. But I mean, it's a theme which is, I think it's underserved by the number of listed players in that sense, right? Because it's a big one. Your thoughts from an investor perspective, Aman? Are there opportunities here, and what sectors? Because you can look at pumps, you can look at water purification, desalination kind of companies, or other areas as well. Just your thoughts.
We are pretty positive on this segment, and we have been owners of some water treatment companies for the last 2-3 years now, and continue to remain positive because the kind of government spend that we're going to see in this segment is humongous, and there are not many companies that have good experience. Like, we have lots of companies in the EPC space for building a road or a highway, but when it comes to civil or urban infra, there are not many companies here, and that's the reason we are pretty much excited in this space. So the macro looks good. The government spending is going to be good. Within that, as you said, we have a choice. We are more invested into water treatment companies, but there is opportunity even for the pipe guys who make water pipes for transportation of water. And pumps are also an indirect beneficiary of what's going to happen in this space. For the next 2-3 years, at least, the segment looks pretty strong.
On consumption, there are a lot of people who believe that we're way past investing in the staples business for growth, etc. You rather back the new age consumer stocks or new age ways of consumption, either through telecom or the Zomatos, etc. of the world. So, what are your thoughts on this theme? How do you play the great Indian consumer story?
It's always exciting to be invested in the great Indian consumption story, but we being value-conscious investors, we find most of the stocks great companies, but not at a great valuation or where the risk-reward equation is favorable for us to invest into them. So, on one side, it's a great company, but is that great company a great investment? Maybe not, because we are shy to pay excessive premium. So, the sector is good. Obviously, last 2 years, there has been a slowdown in the volume growth. People are now expecting that to pick up. But even if the volume growth picks up, the kind of valuation most of these companies trade, there is not much of, you can say, positive risk reward for investors like us to invest into this segment. So while the outlook is good, from a valuation standpoint, not very excited.
What about travel as a theme? That's a big part of the great Indian consumer story. Travel is booming. What's the best way to play it? Hotels, airlines? Will it be B2B travel platforms like TBO Tech? Will it be B2C like the recently listed Ixigo or Ease My Trip? Which one makes a sound investment at current levels?
Our preference will be the service providers. So travel agents, even say tour operators, event management companies, this would be the natural beneficiaries, and preference will be to them rather than getting into an airline or an asset-heavy business like a hotels. The hotels in the near term will continue to do well because both ARR as well as occupancies are up, and it's a fixed cost model for most of them. But over a 3 to 4 year period, I believe the service providers in the hospitality industry will do much better.
You said event management companies. We have these companies listed?
Few of them, they are mid-cap companies or small-cap companies, not in the broader market, but very few of them.
Got that. By the way, Aman, just to last word, the budget is going to be the first big thing, right? From here, the next big thing, rather. Yeah. Directionally, you think I mean, just to go back to what we were discussing when the election results were coming, because of the changed sort of numbers, etc. Will it be very much capex oriented, or will we see something new on the consumption side? Even from a market, how it reflects on the market, because I mean, everything capex is done very, very well, and there are maybe some ignored, sectors, subsectors on the consumption side which remain maybe a little, they've remained cooled off for a while now. So just your thoughts, Aman, with the budget.
Frankly, with the budget, your guess is as good as mine. Absolutely no idea where it is. Only thing which I can add is that it's the same team, the same FM. So not having any major expectations from the budget, because if something that they wanted to do, they would have already done it, or they can do even off budget also. So what is the trend in the last few budgets is that it's been more of a non-event kind of thing. Something similar can happen this year, maybe some tweaks here and there, but frankly, no clue as to which segment is headed towards, in which direction as far as the budget is concerned.
Okay. Of course, the last budget speech was also very short. Maybe not this one. I think is going to be, it's a full-fledged budget. So in any case, we'll watch it closely. Thanks very much, Aman, for joining us. Great speaking with you. Appreciate your time here on CNBC-TV18. So that's the quick a bit on markets. Let's move forward, put the focus on the sort of big block deal that happened today. Vedanta The stock slumped, it recovered, I think, but it still continues to be under pressure. Some 5% equity has changed hands. Hormuz is here with, just to put this in context, finally now, what is because the issue, of course, has been earnings are being upstreamed to Vedanta Resources and, the stake being sold here to take care of the debt at Vedanta Resources Limited. So with this done now, what is the situation? Hormuz, take it away.
Well, won't he? Well, he eventually did this morning, and the street was abuzz with Vedanta's promoters looking to sell some stake, and that did happen this morning, and it was the statement that came in from Vedanta Resources as well that they did sell 2.6%. It was the banks that sold the 2.6% stake in today's session, and this was done to deleverage the balance sheet and to fund strategic growth initiatives. But that's not the entire deal. It was much larger. It was 4.8% that changed hands, multiple blocks that took place. The value was close to around 8,000 crores. The average selling price was around 440 rupees a share, and based on that, if the promoters have sold 2.6%, they could have pocketed around 4,400 crores from that sale. Now, interestingly, this comes just a week after Vedanta Group chairman Anil Agarwal told CNBC TV18 that there is no such plan to bring the stake down from the then current levels of 61.9%. Of course, he left a caveat in that statement. He said that if an investment banker comes and gives an idea, they'll work on it. And so they did. Now, this isn't the first time that the promoters of Vedanta have sold stake. Over the last 18 months, they've sold almost 10%. Now, starting December of 22, when the promoter holding was almost 70%. Now, if we take today's sale into account, that figure will drop to sub 60%. Now, in August of last year, Twinstar was one of the promoter entities. They sold 4.1% stake. They pocketed nearly 4,000 crores from that sale. Now, just earlier this year also, Finside International, the same entity that sold the stake today, had sold close to 2% stake for just over 1,700 crores. Now, based on these three stake sales in the last 18 months, the promoters of Vedanta have raised over 10,000 crore rupees from the Indian entity, and that is excluding the generous dividend payouts. Now, for some throwback. Now, just to jog your memory back to October of 2020, Vedanta's promoters wanted to delist the stock. The proposal was to acquire majority stake from public shareholders at a price of 87.5 rupees a share. But on the 9th of October 2020, the delisting failed. Why? Because it could not get the required number of shares needed for the delisting to be successful. Now, interestingly, while the delisting price was 87.5 rupees, majority of the bids then were placed at 320 rupees a share. Now, even from those levels of 320 rupees, the stock is up almost 40%. Now, how has the stock done since that failed delisting? Now, between October to December itself, that is, I'm talking of 2020, after the delisting failed, the stock was up 18%. Now, taking advantage of the commodity upcycle in 2021, the stock doubled. Now, after 2 years of negative returns in 22 and 23, the stock is up 70% so far this year. Now, analysts are also starting to warm up to the stock. Now, in just 9 months, the number of sell recommendations on the stock have come down from 42% in September last year to just 7% currently. So that's Vedanta for you. From a failed delisting attempt at 87 bucks to selling shares at 5x that price, it's been quite a journey so far.
Indeed, it is. That's about Vedanta. Very interesting though. What we'll do is actually, Hormaz, we'll take a short break, come back on the other side. We'll, pose the same question to our technical experts as well. And as always, we'll get you a check on what dealing rooms are saying in our special T Street chat. Welcome back. A bunch of smaller names are actually surging right now. We have something like a 361 WAM, which has now moved to the high point of trade. We're seeing some traction in some other cash market stocks as well. Parag Milk actually, after a long time, has come back into the green list, and we're seeing some traction in Idea Forge as well. So all these stocks from the broader markets doing a little better than what the mid-cap index would have you suggest. But good time to get in our favorite segment, D Street Chatter, where Nimesh tells us what exactly is going on in the dealing rooms. Nimesh.
Hi, Mangalam. Another record high for the markets. But again, the good part is today it's led by the frontline stocks. So the likes of Reliance has done very well today, and that's backed by FI buying as well. Even overall, the sense is that the FI flows have turned positive, and that's going to be the trend in today's market as well. But do remember, today's institutional data will look large because of that large block deal where the promoter entity sold in Vedanta. That itself was close to 4,500 crores. So, one need to account for that in the institutional data. The sector of the day is clearly telecom. Big move on the telecom stocks, well bid as well by the large institutions. And I guess, the big chatter in the daily room as well as in the overall market is the tariff hike. Now the question is not if, it's a question of when. So that's what a lot of market participants are speculating, that it will come very soon. The other sector where the FI flows have been quite strong of late is the financials, and within that, the private banks are well bid. So another day of strong buying in the private bank stocks as far as flows are concerned, and that's the reason why the Nifty Bank is up another 0.5%. But clearly, today's move is largely in the large caps, and that's largely led by frontline stocks like Reliance.
Okay, Nimesh, in terms of individual names, what is on your list today?
Well, Prashant, the first stock on my list is Piramal Enterprises. The stock came out of the F&O ban yesterday, and a big move in today's market, backed by some HNI buying as well. So again, this is one stock which has relatively underperformed, and now you're seeing a bit of traction in that particular name. The second stock is Arichan Chemical. This is going to be interesting. The stock has been consolidating of late, but now I understand there's going to be a large block deal in this particular name very soon. There is a distressed fund who owns close to 3-4% stake, and they could be the likely sellers in that particular name. The third stock is Indus Tower. We spoke about overall telecom stocks doing good. Indus Tower has sharply rallied in from the lows in today's market, backed by FI buying. But interestingly, Indus Tower will get added to the Nifty Momentum 50 tomorrow. So that's something from a liquidity point of view will have an impact as far as Indus Tower is concerned. And the last is few large block deals. We spoke about, so there was one large block in Hindustan Foods. We haven't spoken much about it, but 11% equity got changed hands. The private equity was a seller there. Anup Engineering is another interesting block deal. 3% equity got changed hands. So my sense is the disclosure there will be quite interesting. I'm not sure whether the promoter entity was a seller in that name as well. And the other two was well discussed as well. Vedanta, promoter seller, and in C Info, the promoter was a seller. But in C Info, the feedback is that some large FI funds have bought as well. So, again, disclosures will be quite interesting in C Info as well.
All right, interesting one out there. Ramesh, thanks a lot for that. Hindustan Foods, indeed, there was a large block trade that took place in the block deal window itself, 11% equity. Meanwhile, Reliance, that's the stock of the moment, definitely at a record high, the top Nifty gainer. After a long time, the giant has woken up, and as a result of which the Nifty is now closing in towards that 23,900 mark. It'll be very interesting to see what happens to the 23,800 call writers on that index, but definitely Reliance is the story. Yesterday, we had one FII favorite, HDFC Bank, do extremely well, and today we have that. So to that extent, it will be very interesting to see what the FII flows in the cash market today turn out to be as well. And that's totally, neglected or made the Nifty Bank weekly options expiry or monthly expiry this time around a bit of a sideshow, which is still holding around that 52,900 mark for that index. I'm looking at Raymond though right now, and before we speak about that, let's get in Mitesh Thakkar for a quick trade for tomorrow. Mitesh, what would you suggest one buy or sell for a reverse trade tomorrow?
Mangalam, I have a BTSC on Sun Pharma now at the day's high. Keep a stop of about 12-13 points to 1506, and look for a target of 1540, 1550 here. And an STBT on Steel Authority or sale with a stop at about 145.5 for targets of 141.
Nitesh, thank you very much for that. Mayuresh Joshi, William O'Neill is with us on the show. Mayuresh, what's behind this big rally that we've seen in Reliance Industries?
I think the elephant is dancing, Rima, as simple as that. And I think it's come to the party a little bit late, but I think 2-3 things working in its favor. Obviously, I think the expectations in terms of tariff hikes for the telecom space itself is going to be a huge impetus as far as Jio numbers are concerned. You're probably expected to see far greater activity on the retail side of the businesses as well. So I think Reliance Retail is expected to fare a tad bit better this quarter around compared to the previous few quarters. And with the kind of additions that they've probably done in terms of retail space, I think those numbers in terms of sheer volumes getting added, in terms of top line, and some element in terms of sequential margin improvement should help the retail side of the businesses. GRMs have largely stabilized, and because of the multiple feedstock options that Reliance probably has at its behest, a large part of outperformance might very well continue in that part of the business as well. Obviously, petchem prices as well have been a little bit volatile over the last quarter or so. Demand is still expected to come back a little bit more slowly. But I think even the petchem side of the business should largely start stabilizing over the next few quarters. And therefore, a combination of all these factors, along with some expectations in terms of the calibrated capex that they have done in terms of the new energy businesses and any momentum thereof over the next few quarters, because nobody's penciling anything in the balance sheet over the next year or so from there. But as those things incrementally start coming on stream, I think a lot more numbers traction will probably be seen. So yeah, the giant has woken up. We remain optimistic on this one.
All right, the giant has woken up. You remain optimistic. I'll ask you for your opinion on this one. We were talking about Raymond, right? Raymond is now up around 8%, a fresh record high on that stock. Mayuresh, in fact, this week the stock is up around 18%. This month it's up 35%. This year has not been a bad one for them. In fact, it's up almost 70-75%. And it's led by fundamentals. The last quarter numbers were the best that the company reported in their history. What's interesting is that today's move and yesterday's move, the last few trading sessions actually, it's been backed by decent volumes. Raymond's move today is nearly on almost 4 times volumes that we are seeing that we did in the last 10 days. And the last 10 days itself, the volumes were elevated. Yesterday itself were the volumes close to around 4 times 10-day average. The delivery quantity on the NSE as of 2 p.m. was close to around 3.65 lakh shares, increased to about 3.66 at 3 p.m. And that again is very high because the last 3 trading sessions, on an average, the delivery volumes were close to 2.5 lakh shares on a day. And this on a typical day would be just about 30 to 40,000 shares. So, you know, the stock price is moving higher, delivery is increasing. And at the same time, people are looking at some of their key triggers going forward, which is the likes of growth in their real estate business, likelihood of a PLI in the textile sector boosting their core business as well. And in that core business itself, they have the ethnic wear business and balance sheet improvement. That would be an important imponderable out there with a debt of over 4,000 crores that they have on their books. The most important near-term event will be the annual general meeting, which is tomorrow, where the shareholders will decide on the reappointment of Gautam Singhania on the board. We've heard from proxy agencies saying that or suggesting that shareholders vote against that. But irrespective of how that goes about, we'll have to keep an eye out on this event definitely. So Mayuresh, on Raymond, what are your thoughts?
Afternoon, Mangalam. No, absolutely. I think apart from the points that you mentioned, obviously the leveraging of the balance sheet, which has happened with the FMCG business, they're a net cash rich company as on a group basis as well. The demerger of the lifestyle businesses, the retail business itself expected to do well. And you probably have multiples put out. You look at stocks like Trent as an example, you put out stocks like an Aditya Birla Fashion as an example. They're still trading at a discount in terms of these 2 segments within Raymond, the lifestyle business and the discretionary coverage universe that we're speaking about. There is still enough multiple accretion that probably can happen. When you're talking about the real estate business itself, I think that is gaining significant amount of traction as well. And the engineering unit that they've probably done, I think that is also gaining some element of steam. So I think if you put all these factors put together, and if you probably assume a higher multiple, 23, 24 times for the lifestyle business, the value itself goes beyond 2,000 odd rupees. If you add on the engineering business EV EBITDA and add the combination of real estate as well, I think there is sufficient enough of room. The stock obviously has run up quite significantly, Mangalam, over the last few days. It's penciling in a lot more in terms of all these sector re-rating multiples within those subsectors itself. But yeah, I think there is sufficient steam left for each individual segment. If they are able to execute well, I think there is still sufficient juice and momentum that the stock can generate.
Okay, Mayuresh, do stay on. We need to slip into a very short break before we come close to the market close. As we do that, let's hear out some important market opinion coming in from Nilesh Shah, MD of Kotak Mahindra AMC. He discusses his key expectations from the upcoming budget too.
So markets will be looking forward to the budget in terms of policy making for next 5 years. And as you very correctly mentioned, now for Indian equity market, margin expansion story is over. Valuations, we are already trading at a premium to other countries, other peers. And hence, it will be all about governance and earnings growth. In market, we will require earnings growth of 15 to 20% and comfort on the governance side, where we are managing fiscal prudence along with investments and taking care of coalition dharma. If we can achieve that trinity, I think market is still in good shape. Market is discounting low double-digit earnings growth. As long as it comes through, corrections are unlikely to happen. And even if it happens, it will be shallow. But what if earnings growth trajectory comes down? Margin expansion story, as Prashant mentioned, is over. If volume growth doesn't come through, then certainly earnings growth could be in trouble. And then there could be correction in the market.
Welcome back. Apollo Hospitals is the top Nifty loser today. Remember, there was this Macquarie note where they said that some chinks are showing up in the armor for the hospitality sector. So they're underweight on Apollo Hospitals and Max Healthcare. And Apollo Hospitals is the top Nifty loser. Outside of that, metals is correcting for the third consecutive day in a row with names like Tata Steel, Hindalco under pressure. Autos too on the back foot, M&M and Bajaj Auto taking it on the chin today in terms of losses. We're still in conversation with Mayuresh Joshi. Mayuresh, in terms of the telecom names, which is the best play? You've got a Vodafone Idea, Bharti Hexacom, Indus, and then you've got the large boys, Bharti and Reliance. What's the best way to play this?
So, Rima, again, I think the telecom operators, both Airtel and Jio, probably look in very fine shape right now. Jio obviously has the best balance sheet out of all the telecom operators as we speak. But Bharti follows suit. What they've probably done in terms of the SMS and the RMS, the revenue market share and the subscriber market share has been astounding over the last few quarters. The expectations in terms of them front-loading the entire 5G capex, both in terms of spectrum payout and the ecosystem when it comes to infrastructure layout as well, has largely been done with. And therefore, any tariff hikes as they come through, so it's a matter of when, as Nimesh pointed out, as that starts happening, I think it creates a huge impact in terms of cash flows and a stronger case for deleveraging of the balance sheet even more. To that extent, I think Vodafone Idea is still going to struggle as far as deleveraging the balance sheet and the huge capex that it still needs to protect its circle in terms of the 5G infrastructure spend. So I think Jio or Bharti Airtel, if anybody's holding, can continue holding on. The PSRS rating, institution holding as per our cancelling parameters look fine. But outside of that, I think Industries is also something that investors can probably keep on their watch list. With Vodafone probably expected to survive now, the expectations of tenancy ratios improving, the expectations of some element of hikes happening in terms of the tariff per tower that they probably generate should be relatively better. And as that happens, the leverage that has built up on the balance sheet of Industries over the last few quarters should start coming off, creating further support or some momentum in terms of return ratios, both ROEs and ROCs. I think Industries is something that you can keep on your radar from a buying perspective. Bharti and Jio is something that you can.
All right. Do you have a view on Hexacom?
Has done well. So I think the best way, Mangalam, I think, is to play through Bharti. So I think if you're having Bharti, I think it's a best way to play Hexacom as well.
Okay. What about cement? Big day for Ultratech Cement. India Cements is up close to about 14%. Sanghi Industries saw a block deal today. Promoters are bringing down their holding. What's happening in cement? Is it just rotation or fundamentally is something changing on the ground?
So I think two things. One, I think with the announcement of rural houses that has happened a few weeks back, I think the impetus both in terms of housing as well as infrastructure growth is something that will keep volumes in good stead for cement companies in general. Second, I think the consolidation phase that is probably happening. Large players are probably looking at players in that 5-10 million category to probably take over, so have a good presence across the country as well. I think that is going to create a huge impact as well as far as the industry is concerned itself. In terms of pure addition over the next 2 to 3 years, demand is expected to remain at par or probably outstrip supply to a certain extent in the next 2 to 3 years, which means that the utilization levels for the sector as a whole should move higher. Realization should be a tad bit better. And even if input cost inch higher, they won't be able to pass this through, creating strong operating leverage on the balance sheet. So having said that, I think a few stocks that we've kept on the radar, leadership stocks like Ultratech, JK Cement is where our belief is that both white and grey cement realization should be relatively better. It has gone through a period of pain as far as numbers is concerned, but there should be a steady state improvement in numbers as we head ahead. So being a little bit selective, but positive on the sector, Ultratech, JK Cement is something we want to watch.
All right, Mayuresh, thank you so much for joining us. We take your leave for now. Right now, as we look at wrapping up today's trading action, there's only one way you can say this: a fresh record high, Reliance and the rest. That's exactly how one can sum up today's trade. Reliance hit a fresh record high, and as a result of which was the top contributor. Almost 65% of Nifty's gains came by on account of Reliance. Bharti Airtel was the second gainer in terms of the top gainers on the Nifty today. And then we did see the Nifty Bank do well as well. The Nifty Bank expiry or settlement was right in the middle of the 52,500 to 53,000 range that the option writers were positioning themselves for. And that's because despite the up move that we saw in ICICI Bank and others, HDFC Bank still ended just below the flat line. Among the stocks that were underperforming in today's trading session, Apollo Hospitals was down about 3%, the top Nifty loser. Brokerages believe that maybe hospital growth won't be as good as it was a couple of years ago. We have M&M, which was lower as well. Some bit of profit taking in the auto space. Tata Steel, Hindalco, some of the metal names not doing particularly well as well.
Okay, let's talk about the mid-cap action. The mid-cap index ends in the red with a negative advance decline ratio. Talking about the big winners today. Mazgaon Docks, which has got a Navratna status, so that's flying up 3% up on that. Vodafone Idea is up close to about 4%. Textile names like Gokuldas Exports, Arvind Fashion, C buying. Prince Pipe and Nuvama, note today initiating coverage with a buy. Target price 820. So the stock did quite well in trade. On the losing side, CE Info Systems and Sanghi Industries. Two stocks where we saw some block deals. CE Info, promoters sold a little less than 1% stake. The stock ends with a cut of close to about 5.5%. Outside of that, Ujjivan Small Finance Bank is now down 9%. This week. Remember, over the weekend, they spoke about how stress is rising in the MFI sector. The credit cost is likely to increase. They brought down their growth forecast. So Ujjivan Small Finance Bank, Vedanta, under pressure, ending with a cut of 2.5%.
Well, but broader market, I think, is really what caught my attention. So as you guys said, I mean, the frontline indices, it's RIL, that's 80 points. And you got ICICI Bank and Bharti, between them, another 50, 60 odd points. So that's about 140 odd points. And, that's pretty much the market. But the broader market, the indices won't tell you, but very, very vibrant screen with a very long list of volume-led gainers, which we will continue to discuss here. So, it's a wrap on this edition for now here on Closing Bell, but we take the market programming forward on the other side. Markets Forward will do that for you in just a bit from now. Stay with us.